Maybe the earnings bar was set a little bit too high. What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, July the 26th. And, well, here we are. And maybe the bar was set just a little bit too high. We've had some pretty good earnings based on what was expected. And, of course, the markets have had some heavy pressure. We saw Google and Tesla get creamed this week. We saw Intel have a big beat and only rise a little bit. So maybe the expectations were a little bit too high. Maybe we have finally reached that point where good news is not good enough. And of course, markets always make these changes from sometimes good news is bad news, and sometimes bad news is good news, and sometimes bad news is just bad news. And I think we're seeing that point now. When you look at the overall picture, there's a lot of issues that go on, and of course, the earnings bar was so high that I mean, Google was down almost 10%. Tesla was down almost 20%. And of course, these are warning signs, which we've talked about week over week, and we'll get more into our market report. But there's a lot of things going on, and I think the biggest story still, which is the biggest untold story, we're all big fans, or maybe not big fans of AI. I personally am not, but I understand its potential power. I also understand its potential scam and the ability to steal from innocent people because of the scams that are created. I think sometimes it runs amok and can actually do some more, initially can do more damage than good. But we'll see. I think that you are looking at a bubble. I think that when you look at the bigger picture, the AI companies have $1.8 trillion off the balance sheet of debt. Now, again, this is very similar to the internet bubble of the 90s. And of course, the internet worked out fine after everything was taken care of. But certainly, somebody's going to be on the hook for this $1.8 trillion dollars. That they call it off book or off balance sheet risk. It's actually rivaling the amount of risk that Enron took, if you remember, during the 2008 bubble. Again, it's not that these companies aren't going to be good. It's not that they're not going to make money, but sometimes the build out, the risk is much more. And of course, then we go into the cost to American people. You've got Jeff Bezos, excuse me. You've got Jeffrey Zuckerberg out there talking and running this new commercial about AI and how powerful it is. And of course, I did an interview on Friday night, and I said, "Yeah, AI is fine, except that the technology has destroyed the family unit. It has destroyed communications. It's destroyed creativity. It's done a lot of destruction." Okay. So again, we'll see how it all plays out. But the Open AI co-founder warns that AI models are becoming harder to control after its model is hacked another firm. Now we've seen a lot more hacking, and of course the power that these use, which we'll talk about in our commentary. But the American people, or people worldwide, are paying and financing and funding these AI companies with no benefit directly correlated to what we're doing. Your cost of energy continues to rise. All of these things you're paying for. And the price of copper, which goes into the building of a house. There's a lot of things. And again, we'll talk about that in our commentary. But again, do you really want to pay to support and build these trillion-dollar companies and let these companies make all this money at your expense? You've got, of course, James Carville, the Democratic strategist, piece of the big donkey. He calls on Democrats to finally cave in on voter ID. We all know the scam of elections. And I'm not saying that the scam of elections is one side or the other. They both cheat. Okay. I don't know who cheats better. but recently it's been very evident that the Democrats have been cheating better. But again, either side, there's been some funny stuff in elections, anyways. Uh, but we have to, you have to wonder about the 148,000 rejected ballots in California, up from 40,000 from the last election. You look at what's going on from crash to trash and rinse and repeat. It's there's a lot of things that don't make sense. Mortgage rates at their highest level in a year. Interest rates continue to be on the rise, which is something that we've talked about at length here over the years, that it couldn't be sustained. You're going to get rate hikes. Now, again, I remind you that rate hikes don't affect you, okay, directly, unless the banks decide to raise your rates. But the banks did not cut your rates when the rates got cut. I remind you that over the last 2 years, the Fed funds rate has fallen 100 basis points. The 10-year notes are up 150 basis points. All that means that the banks are making 250 basis points more per dollar loaned than they were before. So again, it's an issue. Albertsons, major grocer, part of Kroger, warns of softer grocery demand as consumers pull back. Well, again, it's hard to afford the cost of groceries. I mean, it's look, you only have so much money. Okay, you only have so many dollars to spend. So when you go to the grocery store, you can spend what you can spend. And of course, with prices continuing to be on the rise, and of course, we've seen the big move up in the grain markets now. Higher means higher costs. We saw the big move up this week in oil. Now, I believe oil is going to collapse, and we'll talk about that in our market report. But that's going to cost. And we know we've seen from the earnings of these oil companies that they're fucking us, okay? And the price at the pump has not come down anywhere near the price at the level. So again, there's always that little funny business going on. And of course, we saw American Express, another earnings, kill expectations, yet the stock fell 5%. And of course, unemployment continues to be on the rise worldwide. Not a good sign. But again, this goes back to high inflation. Businesses are struggling. Goes back to replacement jobs, AI replacing people to work. And that's, of course, the whole Jeffrey Zuckerberg method, robots to take care of everything. It's all fine and good, but where are we going to get money from unless you go to universal basic income? So there's a whole bunch of problems that go along with this problem. And I don't think any of it's good. And we haven't even talked about the war in Iran, which has been being totally mishandled by President Trump. And again, I am a fan of President Trump, but this is not, this is the handling of this. Again, as I've said, I don't know, for the last 6 weeks, just take them out. Take them out or leave. One of the two. This back and forth bullshit is for the birds. And this is Bubba's Bottom Line. It is Sunday, July 26th. We'll step out of here for a break and be back with our market report right after the break. Bubba's Bottom Line. What's up, kids? What's going on, everybody? Well, I hope you had a great week. And of course, we have sponsors for the show, but also want to remind you about our daily trade finder. Had another winning week. And it's just simply selling credit every day, making a little bit of money, not going for the score, just trying to grind it out and kind of create your own paycheck. But certainly feel free to check it out. And of course, our brokerage partners, which I do have other brokers, full disclosure, but Trade Your Brokerage, $10 a month, saves me over $100,000 a year, handles all of our automation, which is obviously is great. It helps our hedging program. So, I mean, I urge you to check them out. And of course, Capital Trading Group, CTG, we're partners with them on a lot of our futures programs. They do a great job, great customer service, take care of the customer, which is the key for us. And of course, our Joy of Mom investment, check it out. Sign up for the app. It's free for now. But help us out, take a look at it and see what you think and give us your input. And of course, our high school program, which we want to educate our youth. And, in this world, in this country, it's hard to do because, teachers with tenure don't want to do anything. So, but in the meantime, check it out. And we're going to get back to Bubba's Bottom Line with our market report right now. Welcome back. It is Bubba's Bottom Line. It is Sunday, July 26th. And of course, markets had a rough week. Not dramatic, not panic worthy, not off the cliff worthy, but breakdown worthy. I think you're seeing some pretty dramatic breakdowns now. And now here comes the real problem or the real story behind it. Now you have starting to break down some key support levels. So the markets, either these breakdowns are false or they're going to continue. I believe that in the next couple of days, you're going to have what we like to call a rip your face off rally. But I also believe that the markets are setting up to get clobbered. Okay. But there will be rallies. Again, I want you to remember one thing. Okay. There are always opportunities to sell. You don't have to try to pick the top. You want to look for the opportunity that suggests that the markets are going to go in your direction you think. In this case, I believe it's going to be much lower. You've got higher interest rates. You've got companies that have beaten earnings and getting clobbered. So the signs are there. The warning signs are out there. Not to mention the high inflation. Not to mention the interest rate rising. So there's a lot of reasons that we should go lower, but we continue to ignore the warning signs. Very typical of investors is you wait until the horses run away and then you decide to build a fence. So this is our warning, and I've talked to you about this before. I believe the markets are in a lot of trouble. There's a lot of signs, and I'll point them out as we go through markets themselves, but the equities themselves were generally down. The NASDAQ has actually potentially broken down. And again, it could be false, so we'll see. The Dow, Russell, and S&P all lower and very close to breaking down. The dollar continues to rally back up to resistance. Again, not companies, countries put money into the dollar when there's concern. And there's a lot of concern. So again, I'm not telling you to sell dollars. If I were doing anything, I'd like to be a buyer, but I don't trade the dollar. I trade against the euro currency. And that is now breaking down as well, too. Now, I don't want to sell the euro currency here anymore, although we're short, because again, we're extended to 3 standard deviations of the downside. But I would look for a big rally to sell here. The notes and bonds, we covered our shorts on Friday, not because we think they're going way back up, but I think there's going to be an opportunity. They are also 3 standard deviations away from the mean, which would indicate we'll get some sort of a rally here. But they're both getting clobbered and rates are soaring. As I mentioned earlier, Bitcoin continues to be stuck. It tried to break out last week, but still back stuck between 60 and 65,000. Gold seems to have found the bottom at 4,000. It was up for the week a little bit, nothing dramatic. Silver was up for the week a little bit, and platinum as well. But they're all just kind of hanging along that flat line down the bottom. Copper, another big AI component. Um, you know, at the end of the day, look, it failed at that 650 level we talked about. The chart is a little bit murky here, but certainly if it came back down to 620, $6 to 620, I'd certainly be a buyer. Grain markets, we covered our longs, or we sold them. They look great. Again, they're a little bit overextended, so we don't want to overstay our welcome. We don't try to pick tops and bottoms. We try to make opportunities, and we look for a little bit of a pullback here before we end up buying them again. Cattle, as we were suggested, has been getting hammered, and down from 250, we're down to 220. I'd look to be a seller at 225. Hogs, we look to be a seller at 90. Natural gas, we're not playing that market right now. I mean, I'd only be a buyer of nat gas, but it would have to be down another 10% from here. And crude, we sold more crude on Friday into that rally, and we'll continue to sell it. Again, there's a glut. There's too much crude. There's nothing to do with it. Saudi Arabia is we're shipping it out through the Red Sea. It's to China. and taking it up the shorts there. So it's not good for anybody right now. And of course, the overwhelming glut we have in this country suggests that prices are too high anyways. So that's what we look at, and we're going to step out here for our final break. Bubba's Bottom Line for Sunday, and we'll be back with our commentary right after the break. Bubba's Bottom Line. Okay, just remember, Daily Trade Finder, Trader Brokerage, Capital Trading Group, The Joy of Mom, and our high school program. Let's get back to Bubba's Bottom Line and my commentary. Welcome back. Bubba's Bottom Line, Todd Bubba Horowitz, Sunday, July the 26th. And, every week I give you my commentary. And of course, this week we're going to talk about AI and the unintended costs that, you're paying for and I'm paying for, and I'm not happy about it. If you go back to when people were mining Bitcoin, and everybody complained about the power that it used, but you were paying for it yourself. Okay, it might have put some stress on the power grid, but you were paying for it yourself via your own electric bill because not everybody was using the power, so they could define it to your exact address and so on and so forth, and you'd pay your electric bill. Well, now with AI, it's all over. There's data centers all over. They continue to expand, and the draw on the power grid is tremendous, which means we need to do a lot more building of more power grids. We need to shore up the power grids that we have. Copper is going higher, prices are going higher, and unfortunately, you and me, the consumer, are funding the AI companies because of the power drag that they're taking, the amount of power that they use. And they use at this point 100 times more power than it was to mine a Bitcoin, and it grinds more every day. So that cost is not being paid for by NVIDIA or by Microsoft or by Meta. That cost is being spread out through all of us because the demand for a product, in this case energy, pushes the price higher. So yes, they're all paying more, but we're paying much more, but not because of our own usage, but because of their usage. So we are backdoor funding a lot of these AI companies, and I think that has to stop. I think that we need to have the AI companies either pay for and build their own power grids, okay, so that they can take the weight off. Because here we have the problem. You have the talk of rolling brownouts coming this summer. You've got energy problems, and they tell you not to charge your car, and they're worried about climate change. So you can combine all that. Of course, obviously, the obvious solution is nuclear power, which changes the game. But that's a story for another day. But the bottom line is that you and me are backdoor funding the AI companies because of the cost of power that we are sharing in, that we should not be sharing in, because we are not receiving the benefit from the company, and the companies are serving lots of benefits, which only adds to their profit bottom line. And this is Bubba's Bottom Line. Have a great weekend, everybody. As always, I thank you. We'll see you back here tomorrow with Bubba's A Update. In the meantime, enjoy the rest of your day.